Here are your top real estate stories for the third week of July, and the news is depressing. Fixed rates are climbing again with many Canadian lenders. First-time homebuyers in Canada are absolutely struggling to get into the market. I have a mind-blowing stat about how many buyers need help with their down payment. And lastly, a warning from the Bank of Canada that a huge percent of Canadians could face higher mortgage payments by 2026. Let's get into it. First up, fixed mortgage rates are on the rise again. Bond yields have been climbing steadily over the last few weeks, and that's pushing up fixed mortgage pricing. Some lenders have already increased rates by about 10 to 20 basis points, and more could follow if yields stay elevated. Bond yields have been climbing due to stronger than expected economic data, particularly from the US, which has delayed expectations for interest rate cuts. So if you were waiting for some rates to come down before locking in, this might be a sign that short-term relief is not guaranteed. If you're buying or renewing soon, talk to your lender. Now might be the time to get a rate hold in or explore your other options. A new study just dropped showing that 70% of first-time homebuyers needed help with their down payment. That includes money from parents, extended family, or financial programs like the first-time homebuyer incentive. The average amount of assistance over $35,000. Why does this matter? It shows how unaffordable the market has become for many Canadians and how hard it is to get in without support. If you're a parent or planning to help someone buy, this trend is becoming the norm, not the exception. It also ties into a story we covered a couple weeks ago, where a lender has a special program to help homeowners provide that down payment. Once you're done watching this video, check out some more of the great content that we have here on the channel. And finally, a heads up from the Bank of Canada. By 2026, around 60% of mortgage holders could face higher payments as their fixed terms come up for renewal. For some, payments could jump by 30 to 50%. Even those with variable rates who've already felt the pinch could face more strain as fixed payment variable mortgages reset. What can you do? If you're renewing soon, review your options early. Consider a blend and extend or restructuring with your broker. And always stress test your budget before committing to a new term. Don't forget to check out our other videos and hit subscribe so you never miss an update.